So Druck, or this guy right here, he came off and said he doesn't really think too highly of these guys, the former chairmen of and chairwoman of the central bank. This guy, Stanley Druck, thinks these guys are stupid and make mistakes, and this guy makes a lot of money when these guys make mistakes with their policy and the stock market falls. He wins big. That's his MO. He's been able to predict the past market crashes. He's averaged about 30% return for 30 years before he went private and said no more outside money. All I'm going to manage is my own money. I'm King Druck. I'm King Druck. All right, well, moving on to the current Fed chairman, Jay Powell. Druck says the verdict is still out on this guy, but he says there's much to lose, and he blames the former central bankers, these guys right here, for the situation that Jay Powell is now in. And also, he may have blamed Trump to put him in that little political pressure vice. So Jay Powell's not in a good position. If he raises rates and tightens policy too fast, we think that will be a stock market crash. That's what Druck says. Jay Powell has a warning from Druck. And Druck says, as I mentioned before, don't raise interest rates, don't tighten monetary policy too fast. You have to listen to the stock market, which had a huge crash in December. And he claims that the stock market is a very good indicator of predicting recessions and future stock crashes. So that makes sense. He's actually been able to do that in the past. And he argues that although there is a running joke that the stock market has predicted 9 of the last 5 market crashes. Yeah, that's funny. He swings in there and says the central bank has predicted 0. So winner goes to the market. All right. Basically, his theory is, yeah, we're in a bear market. And if we keep raising interest rates, it's going to get worse. And I mean the rate at which we raise interest rates, okay? If we speed up raising of interest rates while we allow the debt that the central bank holds to roll off, tightening the monetary supply and the money and credit, then things could get worse. But he says there's an opportunity for Jay Powell, again, ladies and gentlemen, Jay Powell, to prove himself and get out of this scotch-free. It's going to be hard, but he says it's possible. So I listen to him. I don't necessarily agree with everything anybody says. We're all different. We all should have our own opinion. And you're going to hear mine. What I do agree with him is that the stock market is a leading indicator. And it might be wrong 2 times, 3 times before it's right. But if you look at China and all international, Europe, Germany, stock markets, they started to slide off in January of 2018. They're down 23.5%. This is China. This is the Shanghai Stock Exchange. Okay, that was a year in the making. And now we come out with this huge announcement from Apple. What? Apple, a US company? Yeah. Apple cuts revenue forecast because of slow iPhone sales in China. Slow iPhone sales in China. I need to think why that happens. Well, maybe the Chinese aren't spending as much on these iPhones. Maybe a little bit has to do with trade. But the missing piece here is what's known as the wealth effect. Why I believe stock markets are such good indicators of bear markets. Now, I am not saying we're in a bear market. I am not saying we're going in a bear market. I don't know. I don't know what the stock market's going to do tomorrow. I don't know what it's going to do next week. I will never tell you what level the stock market's going to be at the year end. I don't know. I left my crystal ball at home. Nobody knows for sure. They're all opinions. Okay, back to the wealth effect. The wealth effect, shown here by Investopedia, essentially what it is when your assets like your home price and your stock portfolio go up, then you spend more. You feel more wealthy. But at the same time, when stocks go down, like in China, when you lose 23.5% of your stock value, then you feel poor, more poor, and you don't spend as much. Well, can we see that here? Apple cuts revenue forecast because of slow iPhone sales in China? Yeah, I think we do. So basically, that's the blog. If you want more details, go to deerwoodinvestments.com. Thank you.